All of the problems covered in my videos can be downloaded at accountingworkbook.com. If you go to the website, click the PDF link, you can download a copy of the workbook for yourself. Also on the website, you'll find links to all of my accounting videos, not just the ones I've uploaded to YouTube. I've uploaded over 100 extra videos on this website that you can't find on YouTube. So I do hope you'll check out accountingworkbook.com. All right, let's begin our problem. All right, let's go through problem 3-3A. This will certainly be a multi-part video. This is a very, very long problem. You can see we're going to do adjusting entries. We're going to prepare an adjusted trial balance, complete the adjusted trial balance worksheet, do financial statements, and do closing entries and the kitchen sink. We're doing just about everything. So much is going on in this question. I actually had to reduce the font size of the text. And so if you're having a hard time reading it, I'd encourage you to make sure you're watching this in HD resolution. It should come through fine in HD. And the second thing is to download the problem itself and have a copy of it just in case there's something on my screen that you need to look more closely at or zoom in on your word processor or whatever you're viewing the downloaded file in. Okay, let's get going. So it says below is the June 30th, 2017 unadjusted trial balance of NetLock Security, a firm that offers hacking prevention services to large companies, and just a ton of accounts listed there, right? Like big long list: cash, accounts receivable, supplies, prepaid insurance, computers, accumulated depreciation, computers. Nothing scary so far. Accounts payable, salaries payable. Okay, so that's something. Interest payable, unearned security revenue. I'll have to deal with that. Notes payable, common shares, retained earnings, dividends, security revenue, and a big long list of expenses. Nothing scaring me so far. Nothing that I'm saying, oh, I've never seen or heard of such a thing in my life, and hopefully none of it scaring you so far. So it's lists. It says the company's fiscal year end is June 30th, and the following items require adjustments, and there's A, B, C, D, E, F, G, and part A is what we're going to tackle here. We're going to do those A, B, C, D, E, F, G, 8 adjustments. So as necessary, record adjusting journal entries for A through G above. Our fiscal year end, remembering that our fiscal year end is June the 30th. We're going to do a bunch of journal entries dated June the 30th, starting with A. So related to A, it says account of supplies reveals $300 worth of supplies were on hand on June 30th. Okay, well, what does that mean? It means we had 300 left, but we're interested in how many we used up. Well, if I go up to my trial balance, it shows my records show $5,000 worth of supplies. That's my books, right? So my books show 5,000. Reality, I go out and count, and reality shows me that there's just 300. The difference is 4,700. I've used $4,700 worth of supplies that I need to record that are gone now. $4,700 worth of supplies have been used up or expensed. The journal entry: debit, supplies, expense, credit, supplies, $4,700. Okay, that's the first one. Let's do the second. $28,000 insurance policy was purchased on March 1st. Well, today is June 30th, so March, April, May. We know 3 months have gone by since I purchased it. So $28,000 insurance policy, I would have gotten debit, prepaid insurance, credit, cash, $28,000. But I'm not interested in that entry. I'm only interested in this problem in my June 30th adjustment. So I've got to say a $28,000 insurance policy, and I bought the thing on March 1st. So March, April, May, June, 4 months. I think I miscounted before. March, April, May, June, 4 months. So 4/12 of this thing has expired. So 28,000 times 4 divided by 12, 93.33. That's the amount of my insurance expense. That's the amount I'm going to need to credit prepaid insurance. 9333. Okay, that's B. Let's move on to C. The computers were purchased years ago for $214,000. Oh, let me scroll up. The computers were purchased years ago for $214,000. At the time of the purchase, the estimated life of the computers was 10 years. Okay, so 214,000 divided by 10 years means it's going to be 21,400 per year. Now I've got to say, well, how many months did I own them for this year? And the answer is, well, if I bought them years and years ago, I own them for the full year. So I need to do a full year's worth of amortization. Debit. Depreciation expense. I use those terms interchangeably. Expense. Credit. Accumulated depreciation on my computers for $21,400. And that was on June 30th, of course. Moving on to D. D. The $30,000 note payable was issued on February 1st. It accrues at a 10% annual rate. So going up, I have this note payable, right there for 30 grand. So it accrues interest at 10% a year, and the note's going to be repaid later in the year. But our fiscal year end is June 30th, so we got to say how much interest is built up that we haven't paid. So we got February, March, April, May. We got 4 months, right? February, March, April, May, June. Pardon me. We got 5 months. My counting is just terrible. February, March, April, May, June. 5 months. So let's do the math here. We have a $30,000 note. It pays 10% interest. So 30,000 times 10% is 3,000. And we own the note, or have the note outstanding, for 5 out of 12 months. That's $3,000 a year. We want to know what 5/12ths of that amount is. And it's $1,250. That's the amount of interest that's built up that hasn't been paid. That's the accrued interest. This is an accrued expense. Debit. Interest expense. Credit. Interest payable for $1,250. Okay, continuing on then. Let's scroll back up. That was D. We're on to E. On May 1st, 2017, the company entered into a 3-month contract to provide security for a major corporation. The corporation paid $15,000 for their 3-month contract on May 1st. Oh, they paid us in advance. So this is an unearned revenue, and the amount was correctly recorded as unearned revenue. So I go up to the unearned revenues. Yeah, I see unearned security revenue, $15,000. Okay, so on June 30th, we've done the first 2 months. We've done 2/3 of the work. Well, we've earned then 2/3 of $15,000. So again, it's $15,000 was the unearned revenue, but I've earned 2/3 of that. I've earned $10,000. That amount has been earned. So on June 30th, I need to say I've earned, what kind of revenue? I guess it's security revenue. What's our revenue stream here? Yeah, security revenue is our revenue stream. So we're going to credit security revenue, $10,000. And we're going to debit unearned security revenue to say this is no longer unearned. This has been earned. $10,000. That's E. Moving on to F. The company had 3 employees who were owed 2 days of salary. Each employee earns $250 a day. Okay, so let's see. I got 3 employees owed 2 days of salary. Everybody gets $250 a day. So I got 3 people who earn $250 a day, meaning I pay $750 in salaries, and I owe 2 days. $750 a day is what I pay my employees, and I owe them for 2 days. I owe $1,500 in salaries. Debit. And I'll just make sure I'm getting the accounts right. I believe it'll be salaries expense. Yeah, is the account we have related to salaries, and salaries payable. So debit salaries expense, credit salaries payable. To say these salaries have built up. They have not yet been paid. This is an accrued expense, an expense that's building but has not been paid. Last one, G. On June 1st, 2017, the company entered into an agreement to provide service for a new client at a rate of $4,000 per month. At the end of June, the client received their first month of service but had not yet been billed. Doesn't matter they haven't been billed. If we've done the work for a month, they owe us for a month. Whether we've billed them or not, we have earned that revenue. So we've earned 1 month of revenue at a rate of $400 a month. That means I have a receivable, even if I haven't billed them. Debit accounts receivable, $4,000. Credit, and I guess this will be security revenue. Do we have any other types of revenue? Let me just make sure. That's it. It's security revenue. That's the type of revenue our company earns. $4,000. Okay. At that point, we've completed journal entries A through G. We've done all of our adjustments. In the next part of the video, we are going to transfer our adjustments and into the adjusted trial balance and see where we end up. Okay, stay tuned for the next part of the video.